Are on the deal tracker segment, and remember, for the second quarter of this financial year, the deal flow has substantially slowed down across the board, whether it's M&A activity or private equity investments, and even the startup space raising funds or doing any transactions. Let's take it straight across to Prashant Mehra, the partner at Thornton, Bharat, joining us with the authored report findings for the quarter gone by and also the perspective on the deal street. Prashant, always a pleasure speaking to you and welcoming you to CNBC TV18. My first question, what are the primary reasons for the slowdown that we are seeing on the deal street?
Good afternoon, Nisha. Thank you for having me. Yes, you're right. I think if we look at on a month versus last year, deal flow has slowed down, both from a volume perspective as well as from a value perspective. But if you look at the 9-month data, there has been still a surge of about 50% plus in terms of volumes and about 20% in terms of values as well. I think the reason that is slowed down is anybody's guess. There is a global recession that is looming. While India's macroeconomic factors still seem to be strong, but lending rates are going up. There is a threat on what the future will be, which is why people are conserving cash and not spending it on acquisitions, mostly targeting organic growth and not inorganic growth. But I think that is a flavor for the next few months. The first quarter of the next calendar year is something that we should see deal activity come back. In fact, even towards the end of the year, in November, December, when balance sheets close globally, we should see deal activity happening as it happens every year. But I think what's interesting to see in the trend is the fact that there are new sectors which are emerging as far as transactions are concerned. We've had some large transactions on the transport side, which is to do with infrastructure. But I think the overall theme still seems to be technology, directly or indirectly, whether it's retail tech, ed tech, or fintech. So wait and watch, but yes, we need to see what happens.
So while macro concerns are really impacting the overall deal flow, and you said cash is king right now, that's one of the important factors, but market volatility, and I'll call it volatility because we have seen also fair bit of gains also, like a day like today. Right. So what are the factors really impacting the valuations, and is volatility really holding back conversion of deals right now?
I think a bit of both. Volatility, yes. Volatility really defines the lack of confidence as far as the sentiment is concerned. And otherwise, people are conserving cash because if they believe that cash needs to be put into organic growth rather than inorganic growth, because any inorganic growth comes with its own challenges, mainly integration and return on investment. So it's cash is king as well as the global sentiment are both impacting deal activity, which is not unlikely at all. It's always been there. But I think that the Indian markets responding well, like the day today, will probably ultimately lead to a positive sentiment in the next quarter.
Right. So, Prashant, the two important deals which actually ramped up the amount, the deal sizes and the value for the quarter gone by have both been actually spillovers. They have been pending for a very long time. Yes Bank investment as well as SR and ArcelorMittal deal, which has been going on for last 4 years. So, are you seeing now spillover deals converting, or is there a wait and watch on that? And how is this particular quarter really panning out? We are already a few days into the quarter.
Nisha, you're right. I think any new activity will perhaps not be initiated, but anything that has been lingering on for some time will hopefully see a closure in the next few months. Global balance sheets close in December, as I mentioned, and it's always the case that October, November, December, particularly November and December, we see a lot of deals closing that have been on the back burner for quite some time, and I think that will happen. This year will not be different from any other year.
Right. IPO activity that has substantially slowed down as well. Any time you do see that equity window again opening, and separately for startups, is it going to open at all in the near future?
I think, yes, it will open. We need to tide over the volatility which is there in the market. I can tell you that, being part of an accounting firm, there is a lot of IPO preparedness that is still happening. when these IPOs will happen is something that will evolve in the next few months. But yes, preparedness is happening. I think the moment the volatility, at least this huge amount of volatility goes out in the market, we will see DRHPs being rolled out and IPOs happening between January to March next year.
All right, January to March, that's the hope at the moment. But also, Prashant, the inflation as well as the interest rate impact has to show up, and also how the Ukraine crisis also develops, and therefore the impact on Europe. But I wanted to understand specifically on the fundraising aspect of the startup space. There are several stages to startups. Is it very low ticket size and very cherry picking that the investors are really looking at? How is the scenario right now? And how gloomy is the picture for the startup industry going forward?